Let's get you your latest market moves. The JSE index is slightly up, trading at over one-year highs and extending gains for a second day, in line with its Asian peers, in fact. Michael Treherne joins us this afternoon. He's a portfolio manager at Vestact to help us make sense of some of these issues. And I wonder, Michael, before we get to our latest moving developments in the markets, whether there was anything in particular you were looking at yesterday with the signing of the NHI bill?
Yeah, I mean, that was the signing of the NHI bill was well forecasted. The markets knew it was coming. I think when Parliament passed it last year, the market knew it was going to happen at some point. Given that there's still a long way to go until it's actually implemented, and assuming that it gets past the courts, I think the market will only react then. For now, it more looks like high-level poster as opposed to something that's really going to be implemented.
Yeah, certainly. So, okay, give us a wrap of the latest market developments this afternoon.
Yeah, it's a risk-on environment globally, as you mentioned earlier. JSE all-share up 0.3%. Probably more importantly, the rand dollar is currently at 18.20, which it hasn't been in about a year. So that's good news. All this positivity stems from a good CPI read in the US yesterday afternoon. And the slowing inflation rate in the US means that the US Fed will probably cut interest rates. And then that's a green light for global or for the rest of the world to start cutting interest rates too. So that's a general good mood in markets as we speak.
Yeah. So trade conditions went through a tough period, as we know, at the start of the year. It recovered to reach the best level so far in 2024. What do you make of that?
Yeah, so best level since 2024, but it's still not great. It's coming off of 28% of respondents being positive to now 48% of respondents being positive. If that was a test, you would still be failing. Yeah, so some of the big issues here is our ports and Transnet struggling. And that means a lot of our retailers and traders in South Africa are struggling to get goods in and out of the country. But overall sentiment is improving, and people are saying they're more confident about the second half of this year than they are about the first half of this year. So that's good news. And maybe the next time this reading comes through, we'll get over that 50% mark.
Yeah, absolutely. Anglo-American suspending hiring globally. What's happening there?
Yeah, that's on the back of the BHP trying to buy Anglo. And there's these sort of things you always see happen when there's takeovers coming. The target companies generally try to fend off the takeovers, and part of that is trying to be more efficient. And in Anglo's case, they're saying we're going to freeze global hiring because our headcount's probably a bit high. We're probably going to have a few retrenchments down the line as well. And we're going to make ourselves a leaner, meaner machine. It's worth noting that Anglo is also planning on spinning off Anglo Platinum and their De Beers holdings. And all of this in response to BHP showing some interest a few weeks ago and then making another firm offer at the beginning of this week. So interesting times. Let's see how the dust settles.
Yeah. And then, Michael, finally, the Competition Tribunal has given the green light to Sea Harvest to acquire the fishing and abalone business subsidiaries of TerraSan Beleggings. Talk us through the specs of that kind of merger.
Sure. There are so many moving parts in that thing where there's lots of underlying businesses and brands and loan accounts and all sorts of things moving in and out. The long and the short of it is that Sea Harvest will purchase TerraSan. Part of it for share deal. It means TerraSan will also become a Sea Harvest shareholder. And the long and the short of it is that Sea Harvest is doing this to grow their brand of goods that they're selling, particularly Pelamone and their fish meal business and fish oil businesses. And it's their rationale is that by having more brands, they're stronger together than separate. So, yeah, I don't think the consumers will see much of a difference there.
That's, I suppose, one of the most important things. Michael Treherne, as always, a pleasure talking to you. Thanks for joining us this Thursday. Michael is a portfolio manager at Vestact.